go. Got some audio. Let me just check that we're live right now. Yeah, I guess we're live, I think. Let's see. I'm gonna wait a while for people to get in here. If you're live on here, you could chat away. I could actually see you guys on, so there's probably about 3 of you in here right now. Let's see. There we go. Yeah, I just want to make sure we're live. So yeah, this January was actually a lot of things going on in the crypto world. You actually see some things with the fencing right here. This actually was some comments. And then we also noticed the SEC had some comment period also for a new digital asset security special purpose broker dealer. So the regulators are definitely looking at the crypto side. So yeah, let's get the video going on right now. Hold on. There. So I'll probably do like Google, kind of like a FaceTiming. I don't know, maybe at the end or something. Maybe have a couple of you guys jump in, go on here live too. I haven't done that before, so we'll basically figure that out too as we go. So let's check it out.
Hey everyone, good morning or good afternoon, depending where you are in the world. I figured that most people know the panelists we have today, but maybe we could just start with kind of a quick around the horn, just who you are and what you spend your day doing. Maybe Caitlin, you seem to be to the left of my screen, so maybe we'll start with you and kind of go around here.
Hey, good morning, good afternoon, everyone. Caitlin Long, founder and CEO of Avanti Financial Group, which is a chartered bank, not yet operating, that is designed to be a compliant bridge between the traditional financial system and digital assets. Previously spent a couple years working on legislation in my native state of Wyoming, and before that, long career on Wall Street, most recently running Morgan Stanley's Pension Solutions Group.
Perianne, maybe you next.
Yeah, hi there. Perianne Boring. I'm the founder and president of the Chamber of Digital Commerce. We are a trade association based in Washington, D.C. that is focused on promoting the acceptance and use of digital assets and blockchain-based technologies. So I spend my day working with innovators and entrepreneurs and businesses that are investing in the crypto and the blockchain ecosystem and ensuring our policymakers have the information they need to do their jobs and ensure the United States is a leader in the blockchain industry.
Great. And then Julian?
Hey, I'm Julian Sevillano. I'm a senior advisor at Promontory Financial Group, which is a division of IBM. We are a specialized risk and compliance firm. I lead our digital assets practice, and I spend my day working with regulators to help write supervisory guidance with digital assets firms that want to become or are in the process of becoming banks, and banks that are evaluating digital assets activities. So kind of at the intersection of lots of activity.
Awesome. And then Commissioner Peirce.
Thanks, Pomp. It's great to be here today. I'm a commissioner at the Securities and Exchange Commission, which means that I have to tell you that the views that I represent are my own views and not necessarily those of the commission or my fellow commissioners. I also spend my day working with regulators, but also with the entities that we regulate and investors. We regulate the securities markets, and one piece of that, of course, is the intersection with crypto, which is something that I spend some time thinking about among other events that are going on in the markets, and there are many.
To say that the markets are chaotic at the moment, I think would be an understatement. Maybe Commissioner Peirce, maybe let's start with you. I'd like to talk a little bit about regulation as kind of a starting point. And we recently had a transition to a new administration, and we've got an incoming president. We've got some turnover or transitions that naturally happen around that, both at the SEC and elsewhere. Maybe just talk a little bit about how you see the new administration and some of the new leadership, their thoughts on crypto, and if anything has kind of changed, maybe in your opinion, when it comes to crypto and regulatory markets over the last 90 days or so.
Sure. Well, I can't speak for anyone other than myself, and that certainly applies to the new administration. But I think it's a good time to have a fresh start, and so that's something that I think will be positive for the crypto markets. At the SEC, the likely incoming chairman is Gary Gensler. He's been named by the president as the president's choice. He has to go through a process of getting confirmed by the Senate, and that process is likely to happen relatively soon. I would imagine. He comes to the job with a lot of experience, both in the capital markets generally, and then more specifically, he spent the last couple of years at MIT and among other things has worked on crypto issues. I've spoken to him about crypto issues in the past and have had a chance to, I've known him for quite a number of years and have had a chance to talk to him about a number of issues. And so when he comes in, he's going to have a lot on his plate. There's a lot going on now, as everyone knows. And there are priorities that the administration has laid out, many of which have nothing to do with crypto. But I expect that given his knowledge of the area and given the developments that have happened in recent years, it really is incumbent upon a new SEC chairman to take a fresh look, to think about how we've approached the issue, which, as you may know, I've had some concerns about our approach, and I think it's a wonderful chance for us to take get a fresh start, look at some of the developments in the space, and react with some more regulatory clarity. And so I'm optimistic that the new administration will be willing to engage more seriously with crypto, but it remains to be seen where it falls in the priority list.
Makes a lot of sense. Perianne, you obviously have an entire group of corporations and businesses that are very focused on this. What are your thoughts on the transition and kind of how you see things changing for good or bad?
Yeah, I mean, I love Commissioner Peirce's comments on we have an opportunity for a fresh start, and I share a lot of the concerns that Commissioner Peirce has shared at her time at the SEC, and that the tone and tenor towards cryptocurrencies and blockchain technologies in the United States is in many ways focused on enforcement. A lot of the activities, a lot of the conversations, a lot of the hearings, a lot of the things that are happening out of Washington that involve our space come from a place of trying to protect and mitigate against the risk and against the bad actors. And this is something I've talked about for a long time at the Chamber. And it's time to make, one, blockchain a priority in the United States, and two, change the tone. Yes, of course, there's risk to this technology. There's risk to any technologies, but there's also massive benefits from an economic perspective, from a jobs perspective, from a national security perspective. And we really should be figuring out how to foster this technology to ensure that the benefits are realized in the United States and that the people and the companies and the investors in the United States have the opportunity to reap those benefits. And if not, we have everything to lose. And we've seen many investors, many businesses, many people leave the US because of the lack of clarity. And Hester Peirce just talked about the priorities where this administration, the new Biden and Harris administration, they have many priorities that are not crypto or blockchain focused at all. And I think it would be a huge miss if they don't make blockchain a priority within its policy agenda. And they absolutely still have the time to do that and to come out with some statements to include that in their policy agenda.
For sure. I think, Caitlin, maybe a little bit of a nuanced part of the conversation is the gap between the federal regulatory environment and some states. You obviously have led the charge in a pretty incredible way when it comes to the state of Wyoming. Talk a little bit just kind of how you see the gaps between those two, kind of different levels of regulatory environment and what you're thinking.
Sure. In the U.S., it's a little confusing, especially if you're not an American, to understand how the states fit together with versus the federal government. The United States is a republic, so the states are actually superior unless there has been preemption at the federal level of certain laws. And one area where there is federal preemption, it's been litigated all the way up to the Supreme Court, is securities. So anything securities, the feds control. Anything property, the states control. And so, and in banking, it's even more confusing because you have state banks and you have federal banks. They actually have the same powers under federal banking law, interstate banking. So there's really no difference between state and federal, state and national banks in their powers. The key difference there is whether the bank is a depository institution or not. So it's really confusing for folks from the outside to understand how to navigate this crazy patchwork of regulators. I would say one of the most interesting things about 2021 is that you're going to see two really important events coming out of the federal regulators. One is, of course, the Coinbase IPO. Coinbase has filed to go public, and the SEC always combs through the application for the prospectus. It's called an S1 of any company that's going public, and combs through it in unbelievable levels of detail to get it ready so that there isn't anything misleading for investors. The practical impact of this is that if there's something trading on Coinbase that's a security and the SEC thinks it's a security, it's probably not going to be trading on Coinbase by the time it goes public. And some of the questions that haven't been answered yet. What is the legal status of a stable coin? Are de facto going to be answered, whether directly or indirectly, as a result of the Coinbase IPO. So that's the first one. That's a huge event that I think is going to bring us regulatory clarity in the US, whether directly or indirectly, in 2021. And then the other one is the Fed. The Fed has never opined on crypto, and it has two applications pending for payment system access, which is getting to the core of the financial system, from two Wyoming speedy banks with more on the way. There's also an application pending for membership, which is very different from an OCC bank that does not bestow payment system access. But the Fed's going to be making some decisions in 2021 as well, and they've never done that before. So we're going to get some regulatory clarity, and I think that's going to be positive for the industry, although there are going to be, I'm sure, some surprises, and it's not going to be a straight line. It will be a zigzagging line.
Julian, anything to add to kind of these three perspectives? You obviously sit in a different part of the market, but kind of how do you think about this?
Yeah, I mean, I would agree completely with the comments that have been made. I think that the momentum that I think was gathered in 2020, I think a lot of the, Caitlin's bank and two other banks now being essentially digital native banks is a big precedent and one that can be built upon. I think that was done thanks to to permissibility and to some clarification around permissibility of activities, which I think is only, allowing the market, more institutional investors to have confidence in entering into digital assets, which I think is a great long-term trend. I expect all of that to survive, and I expect us to be able to grow upon that. And I remain extremely positive. I don't think that digital assets is a Republican or Democrat thing. It is I think an agenda that everybody can agree on, and it's a technology that is going to enable an amazing amount and already has enabled an amazing amount of innovation, and hopefully also allow for a lot of financial inclusion. And that's something that everybody should be rooting for. And I also agree kind of with Perianne's points about, my job is to help these firms think about risk and compliance and how to comply with it. It's the rules are there. It's not that, there's lots of firms that are already complying, that are already very digitally compliant. I like the way Caitlin kind of referred to Avanti as that digitally compliant, that regulatory compliant bridge to digital assets. And that's what we need more of, right? So I'm extremely enthusiastic about 2021 and beyond.
Yeah, I really appreciate 2 points that you just made, Julian. And one is that crypto and blockchain, it should not be a political or a partisan issue in any way, shape, or form. It's about technology, it's about economics, it's about innovation, it's about jobs. And then on the other point, this administration, the Biden-Harris administration, has a number of priorities that I think map very well to blockchain technology and cryptocurrencies. And one is on financial inclusion. If you care about financial inclusion, you should be so excited about what cryptocurrencies can bring to the marketplace. So in terms of the transition of the administrations, from a Republican administration to a Democratic administration, I don't think there should be a huge shift in the way that policymakers are looking at this technology, but I do think different aspects of the benefits of this technology will resonate differently with people on other sides of the aisle. Financial inclusion is a huge one. I do think that's an area where we as a community need to do a better job of articulating data and facts on how we are serving the underrepresented constituencies in the United States and globally. And I think that is a winning conversation to have with this administration.
So, Commissioner, that brings me to, I think, what is the topic of the moment, which is all of the GameStop slash Reddit slash kind of just retail trading, right? And I think that there's one side of the argument that would make a case, hey, this is great. We have financial inclusion increasing. Historically, about 50% of the bottom percent of the population didn't have investable assets. There's been a reduction friction to information, communication tools, and access to markets. And so, regardless of kind of the short-term price volatility and kind of decision-making, this is part of a much larger, very positive trend. The other side of the argument, I think, is, hey, this is insane. GameStop's not worth $50 billion and everyone's going to lose their money and we should stop this immediately and go back to, kind of investing and not glorifying day trading. I look at it, usually the truth's somewhere in between. And so just how do you think about the rise in retail trading and these consumer applications, financial inclusion? And then do you see any similarities between kind of that world and Bitcoin and cryptocurrencies?
Sure. Well, as an initial matter, I think it's important to remind people of what the role of the SEC is, which is, our job is to set the rules for the market and to ensure that the market has integrity and is serving investors well and is serving companies well that are out there trying to raise capital. And so we don't take positions on the merits of things. I think Caitlin is right to mention the Coinbase IPO as an event that will attract attention to crypto from maybe some quarters where there hasn't been attention on it. But we will not, as we review it, take any position on the merits of whether it's a good investment or not a good investment, just as we wouldn't for any other IPO. That's really up to people to figure out. We will, ask that the company disclose risks. And one of those risks may be that some of the things they're trading turn out to be securities and they end up or treated as by us as securities, and they end up having to face a legal action. So it's important not to read too much into what the SEC does on any one decision. And so I think something similar here. Look, I think it's great that retail investors want to take part in our markets. And I do think that, for too long, we've been hoping that people would take advantage of the markets that are there to help them build their retirement nest egg, send their kids to school, build generational wealth to pass it on to their kids and grandkids. And some people have participated, and that's great. We've got a lot of people participating in the markets, many through exchange traded funds, mutual funds, that kind of a vehicle, which is fantastic. But if people want to get involved in individual stocks, that's fine too, and they might come to a view based on their interaction with the company of the value of the company, and they may want to weigh in there, or they may be looking at other techniques that other kinds of investors use. We always want to tell people, you can get into the markets, that's great, but you also have to realize that with any investment, there's a risk. So you've got to be prepared for the downside. I think today there are some people who are probably learning that lesson, as stocks that were maybe high are not as high anymore today. And so it's important for people, and especially I come from sort of a libertarian framework, which is, I think it's great. I want people to participate in the markets. I want as many people involved expressing their views about things through the marketplace, interacting with one another voluntarily. But ultimately, when you do that, you're taking the responsibility too. So be skeptical, do your due diligence, ask lots of questions. If something doesn't make sense to you, probably don't get involved. It's better to take your time. Investment opportunities are generally longer term and take a little time to play out. So don't feel that don't have this fear of missing out. But I think that the points about inclusion do point back to crypto, and some of the same themes are there, which is, people are wanting to get involved. They're wanting to make some money, and that's great. They push back against things like our accredited investor rules, which say there's a certain set of investments that we're only going to let rich people have access to. People don't like that. I think there's some of that same kind of feeling going on. And, frankly, I think people are weighing in through both crypto and the equity markets in response to some of the things that the government is doing. And they're seeing some policies that they may not think are so wise, and they're reacting, and they're getting involved in markets to express their opinion on those kinds of things. So it's an exciting time for our markets. I urge people to be cautious, but I do hope that at the end of the day, this means that more people are able to participate and are able at the end of the day to build what they think is a good portfolio for themselves.
So I think that brings us to kind of some more market infrastructure stuff that's changing. We talked a little bit about the reduction of friction to access to markets. Caitlin, you've been kind of at the forefront of watching a lot of what I'll call kind of bank access to crypto, or crypto access to banks. Can you talk a little bit, maybe just for those that aren't aware of some of the recent OCC announcements or kind of clarifications, and then also how you see the bank landscape playing out right now?
Sure. Well, it's interesting. The OCC came out with some pronouncements in the last 6 months, a number of them, not just crypto related. And one of the biggest ones has already been reversed. So it's an interesting, that's the fair access rule. One of the interesting questions is how much will stick. I think much of it will, but there's also, and Julian can chime in on this, there's when administrations change and rules change, they're not necessarily, the old rules are not necessarily reversed, but they start getting slow walked by the supervisors. And one of the things that's true about what's happening at the federal level in banking is that the supervisors were not ready yet. In fact, the OCC called Wyoming's banking division and asked for Wyoming's supervisory manual, which Julian and his team have been working with the state of Wyoming for 18 months or so to create. And so Wyoming has spent time and money and effort, getting ready to supervise. And Really, it's the only state that has, and the federal government's not ready to supervise yet either. They will be, of course. It's just a question of time and money. But Wyoming's actually now starting to train other supervisors in other states, some of whom have crypto companies registered there that have not yet been through a regulatory exam. Because no one knows what questions to ask. It's just so new. So that's one piece of background. But let's step back. The OCC is one of the 3 federal regulators. So the way banking regulation works is the OCC is a regulator, the FDIC is a regulator, and the Fed is a regulator at the federal level. And then at the states, you've got your state regulator plus the Fed. So the one regulator that's consistent across the state and federal is the Fed, which operates the payment system. That's the most important thing the Fed does. It's not actually monetary policy, it's the operation of the payment system. What's interesting is that we have not seen pronouncements coming out from the Fed or the FDIC. We've only seen pronouncements coming out from the OCC, and they typically move together, but in this example of all the crypto pronouncements that came out of the OCC, they did not move together. So we don't know what the FDIC thinks of all this, and we don't know what the Fed thinks of all this because they haven't said anything yet. And so how much of that is still enforceable in a new administration where the OCC itself has already made one U-turn, and then we never heard from the FDIC or the Fed is an interesting question. The FDIC, the reason I didn't mention the FDIC with the states is that the special purpose depository institutions were expressly designed not to require FDIC insurance. And there's a very specific reason for that, and it's alluded to in your question, which is that access to banking for the crypto community is still really difficult. Most banks won't service crypto companies. Even Avanti, when we started, we are up the middle of the fairway, getting a bank charter, and we even had trouble getting a bank account because the banks just won't service crypto. It's deemed to be a high risk industry. And one of the reasons for that is the FDIC. The FDIC is really one of the other regulators to watch, because one of 2 things could happen. Well, I guess one of 3 things. One, they could just stay where they are, which is essentially, not say anything, but not be supportive of what's happening in crypto either. Or the opposite ends of the spectrum are they could start greenlighting everybody to get FDIC insurance, which has not happened yet. Or the opposite end, the scary part, as Ryan Selkis from Masari points out, that the crypto industry is reliant on a very small number of banks, all of whom are FDIC insured. And if the FDIC suddenly decides that they don't like crypto, that's a single point of failure risk for the industry, right? We don't know where the FDIC is. And so one of the most important reasons why the state special purpose charter got set up is precisely to make FDIC insurance optional, so that the special purpose state banks don't have to get FDIC insurance. And therefore, if the FDIC does not want any exposure in the FDIC insurance fund to crypto whatsoever, then there is actually a way for this industry to continue to get banked. It's interesting also that multiple states are now copying us. Wyoming has the special purpose depository institutions, and all the rules and the supervisory exam manual are essentially done and ready to go. And lots of work. It's 2.5 years of work directly with the Fed already. But in other states now, it's starting to happen as well. South Dakota and Nebraska, just in the last 2 weeks, have introduced the special purpose depository institution legislation, and Texas and Florida are looking very seriously at it. So you will see that special purpose bank charter start to come up in other states as well, I think. And that's good, because it also creates a check on the federal regulators. If they decide to flip the switch and don't support crypto anymore, there is a way for us to continue to keep the industry banked.
Julian, maybe talk a little bit about kind of your role in a lot of the work that Wyoming's done, and then kind of how you guys see some of this develop.
I mean, Wyoming is a great example, as Caitlin has suggested. If this didn't happen overnight. This has been several years in the making. There was very deliberate planning, and there was you have to start with, legitimizing crypto and digital assets in a legal framework that can then support, then have very clear permissibility of activities, right? What sort of activities can, Caitlin's bank and other speedies basically do? And then you have to basically have an understanding of permissibility is just one piece of it. The other piece of it is, how do you actually perform digital assets custody, for example, in a safe and sound manner, right? And how is that different from custodying a fiat asset, and how do you manage those risks? So this is for Avanti and the other and Kraken and the other speedies that'll be approved in the future, that they have a very clear understanding of what they're allowed to do and how they're allowed to do it, right? And that provides a huge amount of clarity and a huge amount. And maybe take a step back, thinking a little bit about the OCC. I do think that I do think that most of these are going to survive, especially the interpretive letters on permissibility. I think they were very well researched, and they're on pretty good legal ground. So I'm not a lawyer, but everybody that I speak to suggests that it's kind of hard to walk back permissibility once you've already approved it. And so that speaks to, at the national level, this activity continuing, and as Caitlin suggested, at the state level also. But there's a reason why we have a bifurcated, why we have a state banking system and we have a national banking system. There are, Caitlin's, Avanti Bank's business plan fits perfectly with what the Speedy is allowed to do, right? And then if you think about Anchorage on the other side, which is the First National Bank, they have a different business plan and they have different interests in some ways that probably fit better with a national charter. And you'll have that across the board. And I think that's a really good thing. But what's important, and Caitlin alluded to it, is I think the supervisory guidance is still behind, right? And at the national level for sure. And the pioneers in this space, the Avantis of the world and others are having the benefit of, frankly, working collectively with the regulators to develop best practices for risk and compliance. And maybe also feeling a little bit of pain, probably not in the case of Caitlin, but I'm certain in the case of those that are going through the OCC process, because they're also having to work to educate the regulators on the specific activities and the way that you manage risk is sometimes different and almost sometimes incompatible with the way that you would normally manage risk for a fiat or an analog to a fiat activity.
And so, Perianne, what I want to talk a little bit about now is this whole idea of centralization versus decentralization, right? If you kind of hear both from a regulation standpoint and operationally how some of this is getting put into practice, it feels like most of the regulatory framework and most of the attempts to build various products and services are all coming from the centralized perspective. I know that the chamber has a lot of centralized companies, but any thoughts or kind of previous work that you guys have done in terms of the decentralization efforts, whether that is decentralized autonomous organizations, DAOs, or any other sort of decentralization that seems to be becoming more prevalent in the conversation with kind of last week or two events?
Yeah, no, absolutely. I spent a lot of time thinking about DAOs and decentralization and the DeFi space and what the regulatory risk and considerations are for that sector of our ecosystem. First and foremost, one of our key policy recommendations to the Biden and Harris administration is to understand and take a study of the unique attributes of cryptocurrencies and blockchain technology. You are not going to be successful trying to put crypto in some type of legal box that was built decades ago for other products and services and technology cycles. This requires a dedicated look, a dedicated study, and it may require new laws and new regulations. And we definitely need regulatory clarity in many areas across the federal government, well, and state government too. One of the things that we see as kind of a risk to DeFi is that it's an incredibly creative part of the ecosystem. It's something that I personally am incredibly interested in, but there's also a lot of things that could make regulators take a closer look. And because it's such a nascent and an emerging area, we don't want to come in with a hammer too early and stifle innovation in an area that is still trying to define itself. You know, a big part of DeFi today is around yield farming. That's where most of the activity, most of the business models, most people are focusing their time and attention to. We've had a number of conversations at the chamber to really challenge our members to think past yield farming. What's next with DeFi? How can we really use this technology to benefit the markets, to benefit consumers, to address things like financial inclusion? How do we get past this inherently profit-making activity? And I think that will happen. But if we come in and we regulate it too early, we could prevent that from ever happening. And I think something for DeFi, that for the industry, that would be smart to do today is self-policing, self-regulating. This isn't an issue that we think is really smart to go and bring a ton of attention to because it's so young. We don't want regulators taking a super close look at this space when it's not even defined, the industry is not even sure where it's going, and there's a lot of potential, but it's still incredibly early days. But there are risks out there. There's risks to consumers, there's risks to investors, and they're very unique. So this is an area where we're really encouraging our members to be proactive, come up with best practices, find ways to ensure the users of your platforms have appropriate disclosures, make sure they truly understand the risk of using their platform, have an educated user, have an educated consumer. And a lot of times the people in the DeFi and the in the DeFi community, it's also younger teams. It's younger people, it's younger teams, it's younger companies. So it is important that we give guidance to these folks of, you're playing in a big world. We want you to be successful. Here's some key things you need to think about. And self-policing, disclosures, best practices, I think that is the key for today. I think it's too early to start defining regulatory considerations for DeFi. I don't think that's the right move right now. But it's absolutely an area where the industry needs to come together. And one group that's doing a good job of that is the DeFi Alliance. A few groups out of Chicago put that together. There's a number of good conversations happening there. Jake at Compound is leading that. Colleen Sullivan at CMT Digital is helping facilitate those conversations as well. And for those in the DeFi space, that's a group that is providing a lot of leadership on the regulatory, but also day-to-day issues of operating in a DeFi environment.
Commissioner, and any other thoughts that you have in terms of how decentralization can change the way that regulators look at the market, or potentially add complexity, obstacles, maybe actually make it easier? Just any thoughts there?
Sure. Well, I agree with Perianne that crypto does kind of deserve some regulatory framework that's fit for it. And that's something that when I came to the SEC, I really didn't think that we needed to make any kind of wholesale changes or special exceptions for crypto. But my couple years at the commission have really showed me that I think there is a need for that kind of thing. And so I'm glad for efforts like those in Wyoming that Caitlin and Julian have been working on. I think those are really important for us because they've shown us, you can actually develop a framework that is not a light regulatory touch necessarily, and it's a real regulatory framework. People are trained specifically to look at aspects of this space that need particular regulatory attention, and that all makes sense. DeFi has certainly been an interesting thing to watch over the last year, and I think there is a lot of exciting activity going on there. Perianne's right that there are a lot of very young and enthusiastic groups involved in the space. I always worry that what will happen is something similar to what happened in 2017 with the ICOs, which is that there's a lot of activity, and then several years later there comes enforcement activity from the regulators. That's not my preferred approach. My preferred approach is to set out some rules. And so I think as people are thinking through this, while I agree with Perianne that the ability to develop a space without having a regulatory hand come in right away and try to set rules that may not work and may not be very flexible, that is a concern. It's a concern that I share. But I also think if you're working on something that you think might implicate either the banking rules or securities rules, it is better to have that conversation early with us. I think decentralization is exciting for a lot of reasons. One of the things that anyone who's studied financial regulation worries about is resilience, the ability for one piece to fail and for the system to keep working and to keep working well. And that's something that I think decentralized technology is really encouraging for, because that's the whole point. You're not reliant on one central point of failure. But from the regulator's standpoint, we're used to seeing those centralized points of failure and regulating them a lot. And so what do we do in a situation where you really don't have anyone standing behind a particular technology? Someone launches software and people use the software. Okay, I mean, there's no one to regulate, right? That's not our space. And so I think that is going to pose challenges for us. I think some of the activity that's been most interesting to me to see is what's going on decentralized exchanges or automated market makers, which are really doing tremendous volume. And what is the proper role of a regulator there? So I think that's an interesting question. I think DAOs also present really unique challenges for us as a securities regulator, but also for states as they think about corporations. What's the meaning of a corporation? So there's a lot of fun stuff to think about. I don't have all the answers though.
Caitlin, I want to talk about maybe we have a policymaker who's here and a regulator, but also we have kind of a whole bunch of people who are watching. And so what do you think policymakers or regulators can do to encourage innovation in the market while still protecting market participants?
Well, there are a lot of things that still need to be defined. And in a lot of cases, the regulators won't opine until they have an active application in front of them. So that's why, again, it is so important that there are 2 active applications in front of the Fed for payment system access, and the Coinbase IPO prospectus is filed, right? We're going to actually get answers, whether explicit or implicit, from those regulatory processes where the regulators are now formally being asked to opine. It's not a no action letter process or an interpretive letter process that takes months or even years in order to get regulatory clarity. So there are a lot of things, like for example, I'm a huge fan. A lot of folks have probably heard me speak before about problems in the securities industry and situations where I ran into where our clients' pension funds were having their pockets picked by market structure problems in the securities industry. And the pension fund managers didn't even know, for example, that the securities that were supposed to be custodied in a non-lending account were actually lent out. And when the pension fund manager needed those securities to be delivered the next day, the custodian had to admit they didn't have them and couldn't deliver them. And the surreal conversation of, wait a minute, they're showing up on my brokerage statement. How is it possible you don't have them? Well, now all the GameStop stuff is underscoring the real problem isn't that mom and pop investors, are having some fun trading. The real problem was the fact that the Wall Street accounting systems were inaccurate and allowed more shares to be sold short than actually existed. And the impact of that was that the legitimate owners of GameStop had their pockets picked, because anytime you have an artificial increase in supply of something and you're leaving demand constant, think back to your supply demand curves from economics class, your price goes down. And so that is where the fraud was. That is where the pockets are being picked. And I've been pretty outspoken about those issues before. So how do we fix those? I spent a lot of time thinking about how to work within the existing system. I'm really dedicating my career to fixing these issues. They are basic fundamental fairness issues to mom and pop, regular folks, investors. And it's market structure driven. That Dole Food case that is so infamous in this area, where it's very similar to GameStop. There were 1/3 more claims to Dole Food shares outstanding than there were Dole Food shares, all of which were backed up by legitimate brokerage statements. Okay, the bookkeeping systems on Wall Street really screwed up. How did that happen? And again, similar magnitude to GameStop that had 138% of the float sold short. it's illegal. This stuff shouldn't be happening, but it does. Why does it? It's because of these. It's because the bookkeeping systems are never in sync with each other at any moment in time, and we have a delayed net settlement structure in our markets. And crypto is real-time gross settlement. Again, delayed net settlement is what we have now. Crypto is real-time gross settlement. So how do we actually put those two systems together? The answer is you don't. They're fundamentally very, very different. And I worked on trying to figure out how within the existing system we can make those tweaks around the margin. And the problem is the market structure is so fundamentally different that what I concluded is that you basically just need to let both systems grow up independently and build bridges between the two. And what will happen is let markets vote with their feet. If an issuer decides they don't want to issue stock in the old system and would rather actually issue it in the new system, then let them. And so to answer your specific question, that's what I think the SEC really could be helping with. You're seeing it in payments, right? The applications that are in front of the Fed right now are very specific about new technologies being applied to payment systems that are independent of existing payment systems, but are integrated into the Fed directly. We can do the same thing in securities. We can green light security token issuance. We can define what a good control location is for a security. We can make it clear that what it's going to take for you to be a broker dealer of security tokens, and have it, instead of having it be so narrow and so slow, which is what's been happening so far. And this is where Commissioner Peirce has been so helpful in articulating the reasons why you need to green light this. It is a threat to the incumbents, but we need to green light it so that markets can vote. And these new real-time gross settlement technologies that do not have these layers of intermediaries and do not require 2 days to settle a securities trade, which is when all the nefarious stuff happens, that's what we need to green light. And I'm so optimistic that we're going to get there.
Perianne, I know you've got a ton of ideas here as well. Anything else to add?
Caitlin, it's so well said. And these are comments that Caitlin and issues that Caitlin has been pushing for and talking about for a long time. And I guess the one other thing that I would add here is just the effectiveness that Caitlin has had with policymakers. Senator Cynthia Lummis from Wyoming, she tweeted about this earlier this week, where you can tell Caitlin and Senator Lummis have had a number of conversations about this, where she talked about that more, there were 38% more outstanding claims to GameStop stock than stock that actually existed. And then she goes on to talk about how this can be fixed with blockchain technology. So what we're seeing with GameStop is it's such a relevant issue. I think it's something that really hones in on the value proposition of what blockchain technology can bring to financial markets. While there are a number of policy issues outstanding here, it is important to focus in on where blockchain can provide value and in financial infrastructure. So I think there's kind of looking back at what's happened just in the past year, 2020 to me was the reset button to the global economy, where we had a number of things happen that has addressed so many of the major flaws in our macroeconomic system. We had, with the pandemic and all of the government responses to the pandemic, with these huge government financing packages trying to get money into the hands of the people to stimulate the economy, the increased reliance on digital infrastructure, the need to have modernized payment systems. All of these issues point back to the value proposition of blockchain. So we're incredibly excited about what the future of this industry holds. We think, while we're seeing so many other industries suffer at this point in time, at the Chamber, our members are thriving. We've surpassed all-time highs in the crypto markets week after week in 2021. And I think it's going to be an incredible year, and we're just hitting that tipping point. I think the value proposition of blockchain technology in the institutional case for cryptocurrencies like Bitcoin have been made, and we're going to be entering an era of mass adoption, and it's going to be quite wild. So put on your seatbelt. It's not going to be a straight line. It'll be a zigzag, like what Caitlin said. But there's massive potential for the future of this technology, and there's I think no other exciting place for us to be spending our time and dedicating our careers to this space.
So I want to switch gears a little bit. Julian, you spent a bunch of time working on stable coins and various digital assets that kind of have different construction to them. Maybe just talk a little bit about some of the work that you've done there, and then also kind of how you see the stablecoin market today and its importance as the crypto industry continues to grow, but also as the traditional financial markets kind of start to blur the line between crypto and traditional finance.
Yeah, I mean, it's a really good point. I mean, we're seeing kind of what we're seeing and what we started to see last year, and what we're seeing, I think, will accelerate is this the traditional financial market, kind of blending in with kind of the cutting edge, digital assets market. And there's going to be some friction when that happens, but there's also going to be a huge amount of benefit. And I think, going directly to your question, but also building on kind of some of Caitlin and Perianne's comments, people tend to think about crypto as everything is the same, right? And Bitcoin is very different than a stable coin, for example. And if you think about the foundation of what blockchain is and the promise, it's infrastructure. And it's infrastructure that you can do lots of things with. You can facilitate payments with. As Caitlin was suggesting, you can also make security settlement much faster and more secure and more transparent. A lot of people ask me, well, isn't it, aren't these transactions very, anonymous or pseudonymous? I'm like, in some cases they are, but blockchain is also incredibly transparent. You can really go in and see where everything has been. And as it relates to stable coins, one of the things that I found most interesting of all of the recent OCC activity is that they, in the most recent interpretive letter on stable coins, they explicitly stated that a stable coin, when backed by a reserve, is ESV, electronic store value. And what that means is it's equivalent to a check, it's equivalent to a debit card. It is a valid payment instrument that is equivalent to its fiat, to the underlying asset that it supports, right? If it's properly, managed and properly structured. Stablecoin networks are also things that a stablecoin network can be the most compliant and secure stablecoin network in the world, and it will have almost no utility to anybody other than maybe you could build a private closed stablecoin network that can have some utility internally, but won't have a lot, or you can have a completely open stablecoin network that could be the Wild West of money laundering as well. And there are many permutations in between. And it really depends on the use case that you want to build, that you need to support your stablecoin network for. So, for example, there's lots of use cases that treasuries, treasury services are considering how to manage that. I know Caitlin in particular has the Avid that is designed to support kind of corporate treasuries and transfers of corporate treasuries and other things as well. And then there are, those models that are more focused on cross-border payments. I think what was helpful and useful as it relates to stablecoins in the OCC's pronouncements, at least, were that they were specific about the types of reserves and how to hold reserves against stablecoins. So there's some guidance there. And in Wyoming, there's obviously its own guidance as well, which also is helpful in helping to do that, not just from the perspective of banks that are evaluating building their own stablecoin networks, but obviously from the perspective of consumers and institutionals that are considering, if I'm going to hold a stablecoin that's issued by a bank, I want to understand how it's structured. I want to understand how it's reserved. I want to understand what sort of liquidity is supporting it behind it. I want to understand all of those things. And I think stablecoins is a massive area of opportunity in payments and beyond that I think it's going to be very interesting. But again, there is a huge spectrum, and understanding the risk versus utility and where you land in the middle of that curve is really going to be interesting depending on the use cases.
Commissioner, any thoughts around stable coins? Any insights into some of the things that that you're thinking about? Maybe not so much specific regulations or kind of decisions, but just things that you're considering as stable coins become more popular, both here at home and also abroad.
Well, I mean, I too think that there's a lot of potential there with respect to stable coins, but even within stable coins, there are a lot of differences. And so I think that's where we look at it from the securities framework. We're always looking at it through a regulatory eye, the potential that something may fall within our ambit. But I think there's a lot of exciting work there. I think, frankly, the work on private market stablecoins is a lot more interesting than central bank digital currency work is. But that's another area where there's a lot of attention being paid right now. I do want to just make a little bit of a comment in defense of the traditional markets. I too agree that people should be free to use whatever, to engage with the traditional markets, to engage with potential challengers to incumbents. It's wonderful to have constantly fresh competitors coming in and trying new things. But we can't throw away the traditional markets. They have served us quite well, and there are a lot of different market participants, a lot of layers, obviously, to the events of recent weeks. And those are things that we're looking at. We are certainly looking at areas that may need a regulatory refresh. We're looking at conduct, obviously, across the markets. But I think it's really important for cool heads to prevail, and for us not to think that we need to throw away things that have worked really quite well for a long period of time. I think it's more valuable to look for ways to allow more people to participate, both as investors and then also as when they're building businesses, raising capital. So I don't feel that I need to choose between the legacy financial system and crypto. I think we can have both, and we can see where people end up spending their time, their talent, and their money.
And Caitlin, I know that you've done a bunch of work in this area as well. Anything else?
Well, one thing I would add is that for those who have been following me working on these securities issues, it's probably a little bit of a surprise. How did I end up focusing so much on payments? Part of the reason for that is that I think one of the reasons why we're still at T+2 days to settle a trade in a stock is because the dollar settlement is so slow. And that actually, if we get a fast settlement US dollar with legal finality that can't be clawed back, one of the challenges, for example, with ACH is you can claw back an ACH payment for 90 days. So one of the challenges is if we can get a US dollar settlement that also settles fast in minutes on a blockchain, a real US dollar, not talking about a stable coin that is convertible into a US dollar, that's kind of, in my mind, very similar to a money market fund. It's not an actual US dollar, it's not commercial bank money. Once you get a commercial bank version of a dollar that settles on a blockchain, a lot of things are going to open up as a result of that. And I think that's going to help drag the securities industry's settlement from 2 days, which, frankly, it's been well over a decade since we've had the technology to settle securities trades same day. Why are we still at T+2 is an interesting question. But it's because of all the securities lending stuff, which is where these bookkeeping systems get so out of whack, and where you can have your custodian, lending out your securities without your approval, and not know it. That's the kind of stuff that if we get faster settlement, we're gonna fix a lot of those problems, and I think we won't have these edge cases. And I agree with Commissioner Peirce. The system works pretty well. It's these edge cases that get to these extremes that frankly create the opportunity for folks who see that Wall Street let its accounting systems get so out of whack, and the stock is undervalued as a result. And I don't blame the folks who are trying to capitalize upon that situation. They didn't create the situation. They're the symptom, not the cause. And the cause is the fact that that the stock got overshorted in the first place, and regular investors had their pockets picked, and the stock was cheap as a result of that. period, full stop. Everything else is just a symptom, not a cause. But yeah, I do believe that as we get programmable payments, that's going to have a huge impact on everything, not just payments, but hopefully the securities industry as well. It is also worth noting that the bank charters, the special purpose depository institution charters, are explicitly approved to provide custody for security tokens. There's a very important difference in the special purpose charter that I think is very investor friendly. And that is that investors can choose to custody their assets under what's called a bailment. A bailment is the common law concept that's exactly the same law that applies to valet parking or a coat check. You're not turning over title to your car when you park it at a garage, or you're not giving title to your coat when you check it at a coat check. You're just giving temporary possession for safekeeping purposes. And when you want it back, the custodian of your car or your coat or your stocks has to give it back to you, and they have to give it back your actual car or coat, and not same make and model, which is what happens in securities lending right now. In securities, you deposit your stock at the proverbial garage. They're renting it out to Uber drivers, and they're pocketing the money and sticking you with risk, and not clearly always disclosing that, and not sharing in the spoils always either. Like, that's the kind of stuff that I've been concerned about. And one of the big reasons why we specifically created custody for digital assets, including digital securities, as bailment, is to allow something new. One of the concerns that I've had about the crypto industry is that we've built intermediaries that don't look that different than the old systems intermediaries, yet we've got this incredibly powerful settlement system where the trade is the settlement. So you don't need the delayed net settlement anymore. You can have real-time gross settlement. But if you have a custodian that has the same old model where when you deposit your securities at the custodian, you're now in a debtor-creditor relationship. They actually own title to your assets. Now we've basically just recreated the same problems as the old system. If we can have a custodian that allows you to choose to keep the title to your asset, just like you keep the title to your car when you park it at a garage, not only if the garage goes bust while your car is parked there, can you take your car back out right away? You don't have to wait years through, a Lehman Brothers type settlement structure. But you also always have control over what the custodian does with your assets. That doesn't exist in the securities industry right now because we have this indirect ownership model. And so I very much hope that we recognize that not only do we have opportunities given the new settlement model with these new settlement systems to create a faster settlement, but we can also create new types of service providers around around this industry that reflect the power of the technology.
So we've got a question from the audience, and I know we've only got about 15 minutes left, and there's a whole bunch of them, so we're definitely not going to get to all of them. I'm just going to kind of throw them out, and I'll try to pick who I think is best, but if you've got some other information you want to add to whoever I throw it to, please just chime in. There's a question about the idea of companies when they go public being listed in what I'll call the traditional centralized exchanges, and also cross-listing or simultaneously listing on decentralized exchanges as well. Commissioner, maybe we'll start with you just in terms of any thoughts around the IPO process, centralized entities versus decentralized, and then could we see a world where actually companies choose to kind of participate in both worlds simultaneously?
Well, I mean, I can imagine a world in which company shares would trade across platforms that are decentralized as well as platforms that are centralized. I think we have a lot of work to do to get to that place. I mean, we actually just undertook, at the end of 2020, we undertook to allow special purpose broker dealers to deal in digital asset securities. That's a very small step, very limited, but it is a step that we have to take, and we have to sort through some of these issues. I mean, we do have some institutions in place like SIPC, which is Securities and Investor Protection Corporation. We have to think about how that applies in this space as well. So there's a lot of work to be done, I think, before we get to that point.
Anyone else with anything to add on that one?
I'll just chime in by saying it's so interesting that Coinbase, which is its entire business is blockchain based, is going public in the old system. And I guess it's obvious that that the new system's not ready yet. So to Commissioner Peirce's points, it's not approved yet, so they don't really have a choice. But think about what it means that Coinbase is going public in the old system. It's inherent in the old system that all the shares, the title to the shares, is transferred over to CD & Co., which is a centralized organization. And just recently did they start to digitize. It used to be that you actually had to have a piece of paper in representing all the shares outstanding, right? So you've got Coinbase, which is an entirely virtual organization, looking at all the shareholders having to turn title to their shares over to this centralized organization, potentially in a piece of paper form, in order to go public. That should raise a lot of cognitive dissonance in everyone's minds.
Well, if it wasn't, I mean, before they decided to go to do the IPO, there were rumors that there were proposals on the table from big banks to buy Coinbase. So that would have probably brought even more cognitive dissonance. So I think to Coinbase, this was probably a step away from that. But I mean, you're right. It is kind of counterintuitive that this is the direction they're going, but it probably could have been even. They could have gone further in that direction.
Yeah, I was talking to one of the coin.
Oh, go ahead, Kayla.
Oh, just a quick little vignette. Talking to one of the big shareholders of Coinbase and saying, why would you turn over title to your shares? This is the company you helped build. Why would you turn over title to your shares to a third party? And now what you get back is an IOU from an IOU from an IOU. And if you ever want to get your stock certificates back, good luck. So let's see if all the Coinbase shareholders actually do agree to turn title over. It's going to be required, and that's what's going to happen. But it's definitely making a lot of them think. I think if Mark Zuckerberg had understood he'd never get title to his Facebook shares back, would he have thought twice about it? I think now lots of folks understand, because in part of the crypto industry we're very focused on the settlement issues. Lots of folks understand more now than they did 10 years ago.
I just, with Caitlin's valet analogy, I just think back to a story of someone I know who lived next to a fancy restaurant that had a valet, that had valet parking, and the valets, because it was a big city where parking was very expensive and valets were relatively cheap, they just drove the cars around for the whole time that the patrons were at dinner, and then the patrons got them back when they were done. So I guess that's kind of like securities lending.
Yep.
That's a great example. Perianne, there's a specific question for you around the success or kind of outcome of the Bitcoin that was distributed to, I think it was congressmen and congresswomen. Any thoughts there or feedback that you can provide?
Oh, yeah. So I think they're talking about our Crypto for Congress project. So the Chamber's PAC, our political action committee, gave a contribution in Bitcoin to every single incumbent member of Congress last year. And the results of this were very, very interesting. There were a number of members or campaign committees who were not ready to accept Bitcoin. And then there were a number that were. So there are a number of members of Congress's campaigns that are accepting Bitcoin today. For people who want to learn a little bit more about this, we set up our own website, cryptoforcongress.com. You can check it out. And really the whole point of this was to show those who work on the political side of things how you can use blockchain technology for donations. And we put together a toolkit. And in that toolkit are some educational materials that show from a technology perspective what you need to do to set up a wallet, how your campaign can set up what they need to be able to have an interface for their donors to send Bitcoin and other cryptocurrencies. And then we also have some compliance resources. So the the Federal Elections Commission does allow campaigns to accept contributions in cryptocurrency, and we walk through how they report that correctly for compliance purposes. So that's a project we had a lot of fun with. We will be carrying that project into 2021, so there'll be some more to come there. But there are a lot of members of Congress who support crypto, and an additional way that they can walk their talk is by using this technology for contributions from their donors.
So we've only got a couple of minutes left. I really appreciate all four of you spending so much time with us. I think that I could talk to all of you for hours, but I wanted to give each of you an opportunity to kind of just close this out, almost in some way, like some closing comments. And then if you want to send folks to go to any one place, whether it's a website, one of your personal social media accounts, whatever's kind of helpful to you, where they can learn more information or connect with you. And so maybe Julian, we'll start with you just in terms of any final thoughts or things that you think people should be thinking about, and then where they can go find more about your work or yourself on the internet.
Sure. And I think that we said it at the beginning of the conversation that there's just so much, or maybe it was actually before we went live, so much has been happening and so quickly in the crypto space, and specifically in kind of this intersection of regulation, digital assets, banking. It ruined my vacation and everybody else. I'm not popular at Promontory anymore. But if you want to learn more about what we do, promontory.com. Again, we're helping, hopefully trying to bridge the gap between digital assets, banking, financial services, and supervision.
I'll go next.
Caitlin?
Go ahead,
Sure.
Perianne.
We also lost a lot of sleep over the Christmas and New Year's holiday with all the midnight rulemakings. That's a story for another podcast. Just in closing, I will share what the Chamber's recommendations are to the Biden-Harris administration. I kind of touched on this earlier in the conversation, but if the administration wants the United States to maintain its technological preeminence globally, the administration must make blockchain technology a priority within its policy agenda. And the administration can do this by taking just a few simple steps. One, given the history of regulation by enforcement, Commissioner Peirce touched on this, to kind of reset the tone, they should put out a clear statement of support for cryptocurrencies and the critical importance that blockchain technology is going to play in the global economy for generations to come. So just set the stage. It's an important technology, and we should be fostering its development and innovation in the United States. Two, I already said this, but they need to take a study of the unique attributes of blockchain and digital tokens. Three would be to adopt a light touch regulatory approach to encourage investment, innovate, and innovation in blockchain. So establish clear policy and regulation prior to bringing enforcement actions, implement regulations that focus on the function performed rather than the technology, and prevent regulatory inconsistencies. So coordinate across agencies. And some areas where we do need specific policy guidance is on regulatory clarity for digital tokens. There's a number of ways in which that conversation will be continued into this administration, into 2021. We should also promote tax policy for virtual currency that supports informed compliance. There's a lot of work still to do at the IRS to develop guidance for virtual currency that's principles-based and promotes taxpayers' compliance, and also on anti-money laundering compliance and sanctions compliance. There are many ways that blockchain technology can be used to protect the financial system, but that's got to be done in a way that does not trip over the individual's right to privacy. And we have a lot more thinking and a lot more work to do with FinCEN there, those who are covering the issues of the virtual currency self-wallet rules. It's an ongoing issue, but it's something that's incredibly important because it can certainly change the landscape for the United States. Just kind of in summary, blockchain should be a priority. There's some very simple things that could be done to make the U.S. a jurisdiction that is attracting investors to the space, and we've got to make it a priority. And if we don't, we have everything to lose.
That's great. Caitlin?
I'll close by saying something really cool and exciting is happening in Wyoming. We're not done yet, and that is that we're actually contemplating authorizing DAOs as a new form of legal entity that's recognized under Wyoming state law. The impact of that is it just makes the technology backwards compatible with the legal system. And so you don't need to worry about whether a transaction is actually going to be enforceable in a court of law in the event there ever is a dispute. And keep an eye out. I'll make announcements about the hearings. We'll be probably calling for testimony from folks who support this technology. And our blockchain and technology committee already passed that bill. And so now it just needs to go through the House and the Senate and to the governor's desk in Wyoming. And that should happen, knock on wood. I'm pretty optimistic that it will in the next few weeks. Thanks.
Awesome. Commissioner, let's finish it up with you.
Sure. I'll just close by defending again our traditional capital markets, which I think have led to great prosperity and pretty democratized prosperity in this country. Of course, we can do more. We should do more. I'm excited about doing more, and I think crypto is one way that we can do more. I echo the concerns that if we miss the boat, then we're really going to miss out not only on prosperity, but also on talent in this country. And I'm just going to close by saying my door's always open, Commissioner Peirce at sec.gov, or I'm at Hester Peirce on Twitter.
Well, listen, I appreciate all four of you spending so much time to do this today. Hopefully everyone in the audience learned a ton, and make sure everyone enjoys the end.
There you go, everyone. So some of the latest, this actually was recorded a couple days ago. So there's some direction on what's going on in the U.S. on the crypto side, especially in the capital market area. Some of you guys wanted to talk about the special purpose broker-dealer. So this was actually released probably, I think, December 20th or sometime in December. It was like December 16th or something. Let's see if there's a date on this thing. Yeah, these are some of the comments actually for custody of digital asset securities by special purpose broker-dealers. So this is actually, they're proposing a brand new type of broker-dealer. It's a little bit different than a regular broker-dealer. There's actually different types of broker-dealers in the U.S., but this would be specific to digital assets. And you do have some comments here. Most of the comments are, I don't know what these people are thinking really, but you have a lot of the people that were commenting from Ripple over on this one, which is from FinCEN. So you have 7,000 people complaining about Ripple XRP, if it's a security or not. And then they come over here, a completely different comment period, and they start commenting here for some reason. I have no clue why. But yeah, you could see like this one, see XRP holder. I have no clue why they're commenting about that there. And here's another one. XRP again. I don't know, but I actually wrote in on this, so mine's actually right here, so you can read my thoughts there. But let me bring up yeah, this is actually what they're looking for a comment. And yeah, we'll see if we could do like a Google meeting right now too. So let's see if I could get this thing going. Create, start. Let's see if I get that going. All right. So yeah, if you guys want to jump on, here you go. Let me put some headphones on. Yeah, so if any of you guys want to jump on, here's your chance. So let's see. Could bring up this screen right here. There you go. So Kevin's on. I think you're on mute, Kevin. Hold on, let me adjust the screen. There you go. I think you're still on mute, Kevin. But yeah, this is from the SEC. They're kind of really looking for comments on custody of the digital asset, on really, how to handle the assets, where to store them at, some of the cybersecurity issues with it. So they actually give you all the questions that they're actually really looking for right around, let's see.
Yeah, hey Jeff.
But yeah, this is hey, what's up? From the SEC. Hold on, I'm getting some double feedback on this thing. Custody. Here we go. Yeah. You on, Kevin? So these are yeah, right here. These are the comments that they're looking for. So basically, industry best practices on the private keys, protecting against loss. Another thing they're talking about with airdrops, 51% attacks, which was quite interesting that actually brought up the airdrops. So, and then 3 were to store the private assets at, and then unauthorized or accidental use. And then they kind of want to know, like, 4, what's the industry typically doing? So we kind of see a lot of that right now already with like Coinbase, Kraken, some of the bigger exchanges on how they're actually handling the digital assets and also disclosing some of the risks involved, which is basically just typical disclosures that most regulated financial institutions pretty much already do. And then 5, I don't know, 5 just like, okay, do you guys want more regulation or what? Pretty much pointless. 6, it's in the clearance and settlement side. And then I thought 7 was probably the most interesting question on this whole thing, which really comes about of Reg ATS, which are alternative trading systems. Typically, that's where you have most of the dark pools. There's probably about 20 something ATSs in the US right now. So they're kind of really looking at how these things can be traded on. Reg NMS is a big factor because that's how the U.S. structure is currently working for NMS type of stocks. Some of the issues that were going on with GameStop, people complaining about, shorting, not shorting, basically market manipulation, shutting down the markets for certain broker dealers. A lot of that's really Reg NMS. Like, these idiots passed that. I think it was 2004 or something. But they really just had no fucking clue what was going on. Like, they didn't really understand the way the capital markets worked. And, this is the outcome. When you pass these laws, you actually got to, oops, how do I undo that? Delete. Yeah, when you pass these laws, like, literally it's so hard to get rid of them. So, typically my suggestion is really, if you're gonna like make these dumb laws, you better be really right, or at least approach them in baby steps, because Reg NMS might have probably been the biggest debacle in the U.S. equity capital markets. Like, that law, it's just, it made so much compliance, the way the trading with ISO order types, the way the dark pools work. Like, they're just so clueless. Like, they don't even understand the way dark pools worked back then, and then the way ISO orders worked in the dark and the lit markets. So I pretty much propose within my comment, just make these broker dealers exempt from Reg NMS, because that thing's just, that law is just pretty much useless. Like, especially in the crypto world, like, you got crypto's trading 24/7. It's all over the place, and these Reg NMS just really has no place for this at all. But yeah, that's my point of view of this comment. You can read my comment. Just go over to the SEC right here. It's right on December 31st. Yeah. But yeah, if you guys have any questions, talk more here. If you want to go on to this Google Meet thing, we can blab more. But yeah, I think we're definitely in some interesting times. And, I really call it the crypto wars, primarily because you actually have fiat currencies trading against cryptos. But as we see from QE, most of the fiat currencies are pretty much meaningless. The last real fiat globally is the USD, which is really just a global reserve. And you see these cryptos just ripping, and that's basically a short against the dollar. And you basically have a new regime in there. You got censorship with big tech. You got debanking with these big banks, and all this is doing it's just gonna make crypto, like, just it's just gonna rip crypto bigger. Like crypto's just gonna get it's gonna get way bigger now. Like so much bigger than I ever even imagined. And even they shut down Parler and stuff, like big tech, like AWS, like all that's really doing is just it's just gonna make like decentralization bigger with like IPFS. Like that thing's just infancy right now. It's just gonna get way bigger. You're gonna have networks just unstoppable, and these crypto and the DeFi side, this stuff's unstoppable now. These banks are just gonna be pretty much just left in the dust, like just twiddling their thumbs. You even see that with Coinbase right now. Like Coinbase, they're figuring out their IPO, which to me, like they should have actually really just did a straight up crypto ICO, some type of issue it on a crypto ledger. You got T0 just got approved. I think today they did a deal with I forgot what. Let's see, something popped up. Hey, what's up, Pervish? What's going on, dude? Can you hear me? But yeah, you got I think the CB IPO should have been straight up like crypto on some type of digital ledger. They could put it on all kinds. Ethereum. You could use like Stellar, Algo, whatever. Like there's a bunch they could do it on. But yeah, we're in the crypto wars right now. This exciting times to be living through this stuff. We're probably going to be seeing the most amount of billionaires in our lifetime. Hey, what's up, Perverse? Everybody here? So, yeah, if you guys have any questions, yep. Crypto wars continuing. There's no holding any prisoners. Getting away, let's get destroyed. But anyone else have any questions? Want to talk more? No, this is probably the first time I've actually added in the Google Meet in there, so it could be a little bit more interactive. So if you don't want to talk there, I'm also got the chat on too right here. But yeah, we'll see what goes on. We got the game stock. They're still pumping and stuff. Let's see what let's see the GMT and the GME. Ouch. Yeah. Yeah, so you have that. I don't know. These people on Reddit, I guess they're holding the line still. Like, just buy the one share, hold it up somehow. Like, this is just comical. But yeah. So until next time. So probably do another one of these in a couple weeks or so. Maybe by then, downtown or maybe Pasadena might be open for some live events. Maybe do some live events. I know Pasadena has a couple places, but oh shit, wrong screen. Yeah, there it is. But cool. Peace out, everyone. Talk to you guys later.